Hi, Tushar. How are you doing?
Good, bro. How are you doing, Ron?
Doing very good as well. Thank you so much. Welcome to EMBytes, a new initiative that we have started to expand my business. And this is the second podcast, the second episode that we are doing. And we're honored to have you onto the platform. So welcome to EMBytes.
Thanks, man. I'm just second episode is a big bar, and I saw the first episode, which was stellar. So I just hope your audience doesn't get disappointed by this one.
I'm sure they won't. The whatever I know about you and the level of interaction that I've had with you so far, I'm sure I don't think anybody would be disappointed to hear your answers and to hear your thoughts on certain topics as
Glad.
well. So welcome to EM Bytes. And if you could quickly give us an introduction to yourself of who you are, where you are today, and what you do, and we can begin after that.
Sure. So, hi everyone, I'm Tushar. I currently work for a VC fund called Alpha Wave Global, which is a $20 billion global investment manager. We invest across stages and across strategies all over the world. And I lead some of our investments in India and Southeast Asia and our global crypto portfolio as well. As a part of that, we partnered with XMIB, and I'm glad that this partnership is now turning into a long-standing friendship with both Rohan, Nishant, and the rest of the team, and we're very excited to see what comes from you guys.
Thank you for the kind words. For the general audience out there, so Tushar, like he mentioned, he works with us from Alpha Wave. Alpha Wave is EMB's one of our VCs, and we've had a long relation with Tushar, and I think whatever interaction that we have had has always been very insightful. I've always kind of left that conversation by learning something, and you're a pretty big enthusiast when it comes to emerging technologies such as AI. You always give me your comments and something that's new in the industry. And of course, another level that we connect is that you're a very big sports enthusiast, especially in football. So welcome to the podcast. And
Yes.
right away, I'll begin with my first question. So Tushar, can you walk us through a little bit about your career journey? What initially drew you to the world of venture capital and private equity, particularly leading you from Bain to Kalaari Capital and now Alpha Wave Global?
Yeah, look, my career has been just a series of happy accidents, which I'm glad that it turned out in a certain way. When I went to college, I started, when I went to college, I was doing an undergraduate degree in business. Naturally, everyone would end up specializing in finance there in my college. At that time, Zindagi Na Milegi Dobara and Wolf of the Wall Street had come out, so finance was the hot and sexy word. But actually, when I entered college, I realized that unlike it's like sort of made out to be, finance is not like one monolith. It's a bunch of different strategies, a bunch of like buy side, sell side, VC, private equity, public markets, real estate, bunch of different asset classes all rolled up into one. So college was a period of experiencing all of these different asset classes via a bunch of internships for me, one after the other. And luckily, my college structure allowed me to do that. So I would do like short-term 2 to 3 month internships at one place or the other, and try and figure out at which place has the best skill set match and fit for me, and which is the place that I enjoy the most as well. And during one such internship that I was doing at Singapore Angels Network, now called Riverwalk Holdings, was that hey, VC is it because it is at the mix of technology, innovation, emerging markets, while at the same time having a strong mix of investing and finance weaved into it. Principles might be applied differently, but fundamental principles remain the same across all different asset classes. Uh, and to me, what was exciting was that this job gave me the sort of the right uh, skill set match where I could be, use a little bit of my extraversion, a little bit of my love for hanging out and learning from people, a little bit of my creative thinking and extrapolation that I would get from new markets, and also apply myself from what I was learning in terms of my training, finance, etc. And roll that all up into one to create or become part of stories which can be generational and life changing. When I was in college, I was between 2014 to 17, right? So this was also the time when the first stage of companies were becoming big in India. First stage of these tech companies were becoming big in India. So Flipkart had just started to become out big. Dream11 had just started out. Myntra had been exited recently. Snapdeal was becoming so you were in that V1, and suddenly it was becoming clearer and clearer on what this world could look like. Obviously 10 years down, I wouldn't say that I mean, the world has grown far beyond what we were imagining at the point. But as a gilded college boy, as like, a starry-eyed college boy, it was all very interesting. So then I started backward solving that, okay, if I have to make it to VC, what do I need to do? So I did a lot of LinkedIn scraping. And what I realized was that one common pattern was that everyone who was working in VC in a junior role was either coming from a banking background or a consulting background. Banking was something which I wasn't too enthused to do. So I was like, okay, let's do consulting. And fortunately, Bain happens to recruit from our college. McKinsey, BCG all happen to recruit from our college. Bain was the first recruiter at the campus that day, sat for Bain, got through Bain, and that became the next 1 year of my life. So third year of college was again a bunch of internships, lots of fun, hang out with friends. And then I ended up joining Bain, which I think was a very foundational and transformational journey for me. Because at Bain, I ended up together with like 40 of the most talented people I could imagine from different colleges and different walks of life, all coming together and growing, learning, helping each other. So Bain set up really that foundational basis of that in my career, where they taught me simple things like from communicating well, clearly, and concisely, to also making PowerPoints, to also making Excels. I think these were all foundational skills which sort of help you in the long run. And I'm truly thankful to Bain for helping me with that, right? So then, as I was finishing my 1 year at Bain, I just happened to come across this opportunity at Kalaari Capital. Vaani is obviously a legend of the industry. She is the person who has minted unicorns like nobody's business, is a case study in exit management across a bunch of portfolio companies, and is probably one of the few, I would say, very strong female leaders in our ecosystem today. And not just today, but has been foundational and transformational in creating this ecosystem right from late 2010s, late 2000s actually. So I saw that there was an opportunity that I could work with Vaani Kola, applied to Kalaari. Again, was fortunate enough to be one of the 12 people who were recruited out of, like, I think what I hear were about 2,500 applications. And lock, stock, and barrel, in 1 month, I moved my life, wrapped up my bags from Delhi and moved to Bangalore, which was a very interesting 2 year period for me. But at Kalaari, I saw everything. Vaani was very generous with her time. She invested a lot of time with me and the rest of the team as well. She really embodied the apprenticeship principle, which is the VC business. And she sort of held my hands and took me from, understanding businesses and sectors and asking me pointed questions, to helping me prepare well for meeting with companies. Just, what you should be doing before you even meet the company for the first time. How should you digest information? How should you ask questions to them? Then rolling it all together and summarizing it, and then trying to form a POV, a point of view, by talking to people outside the ecosystem, competitors, ex-employees, etc. That part of the business. And then also the other side of the business, which I think was very illuminating for me, which was the fund strategy side of the story. That how should a VC fund think about their own strategy and their own business, right? How should you think about your cost structures as a VC fund? How should you think about investing your resources as a VC fund, right? Not just in terms of investing capital, but also your own time and resources. How should you prioritize certain things versus not? How should you construct teams? And how should you think about building a franchise broadly, right? So at Kalaari, I contributed to a lot of those efforts as well. From Vaani, what I also learned was a lot of elements around managing people beyond just the workspace. So, at Kalaari, we would all have a very strong personal footprint also. I.e., we would, do golf links together, we would do yoga sessions together, we would go to cult classes together, we would play football together. So a bunch of these non-cultural elements, cultural elements of the work job, which I thought were relevant for a large organization like Bain, but maybe not so much for a smaller organization like Kalaari.
Right.
But I think that's what the principle of empathetic leadership that Vaani embodies sort of also teaches us, right? So I think that was my 2 years at Kalaari. Then at the end of my 2 years at Kalaari, I was thinking, okay, what next in life? Where should I head next, right? As you know, you're a 23-year-old, high energy, high velocity kid. So you're thinking, what next? And at that point, I was like, okay, let me try something which is different, which is more global in nature, which is probably more growth stage oriented. Because I've done early stage, and maybe this is something that I can enjoy, but I want to explore other things before I settle down and decide. And that's when the Alpha Wave opportunity came about at the right time. where I ended up joining Alpha Wave to first initially as a part of their India early stage investment stream, but quickly graduated to do a lot more inside the Alpha Wave ecosystem. Again, an ecosystem which allows you to do a lot more bottoms up, right? So we ended up, so while I was formally tasked to do early stage investing, very quickly I moved on to evaluating growth stage companies, looking at sectors which were more private, like pre-IPO related and stuff like that. Then I also started our global crypto investing practice, where I traveled, all over the world, and we invested close to, I would say, 200, $250 million across 20 odd crypto companies globally, uh, which we continue to be bullish on and continue to invest now as well. Then similarly, now, like, again, my mandate has broadened a bit more to start looking at more private equity type of opportunities as well, in addition to what I was doing earlier.
Right.
So it's been an interesting journey. I'm closing 4 years at Alpha Wave now this year. So it's been my longest gig and probably the most transformational gig for me so far. But I've enjoyed every second of it. What's been most exciting is that, you have a free hand to interact with so many different high quality, high energy people, and they volunteer their time out to teach you things. So I really enjoyed my time on this side of the board. And let's see what future holds. Yeah.
Yeah, absolutely love it. Thank you for such a detailed answer. And when you're answering, I actually get a lot of similar mindsets when I speak to other entrepreneurs as well. That in the way that you have looked at your career journey, your professional journey, and your personal journey as well, is that you've always kind of been interested in the gaps that have existed, and you want to kind of focus on that so that you can continue your career aspirations and grow into your professional journey as well. So it's a very interesting take. And towards what you were saying towards the end of your previous answer is actually it's an automatic segue to my next question to you, is that a lot of people who are watching, a lot of people that I speak to, and I'm sure a lot of people who you speak to as well, of course, startup, people are always interested. Shows like Shark Tank, the entire media around it has obviously helped, boost the name of what a startup actually does and how does it actually work. So, from an investment philosophy point of view, right? I'm sure you get this question a lot. But when evaluating potential investments in startups, especially specifically, what are the primary factors that you usually consider? Do you prioritize things like the strength of the business model, the industry sector, the capabilities founder? What exactly are those kind of factors that you consider?
Yeah, a few years ago, someone very senior in the industry who I really respect said that it's like a good company, or selecting a good company is like making a good sabzi, right? Like you need lots and lots of elements to come together in the exact right proportions, and there is no one primacy of one element over the other. You can have certain hero elements for sure, but it has to be a good combination of everything to come together, right? But a high level, what I can summarize is that markets matter, and markets always matter and always win. Just like you can't fight laws of physics, you can't fight laws of market.
Yeah.
You can't fight laws of market structures. You can't fight concentrations and monopolies in the markets. You can fight those, but it's that much harder, right? You can't grow faster than your market size is growing, and very rarely, in very unique and select opportunities, will you be able to create those markets which are going to be truly transformational and going to matter.
Yeah.
So obviously there are going to be examples which are going to violate all of these principles that I was mentioning. But by and large, I would say that this would be a overarching framework to think about, say, markets, right? So second is obviously probably the most important element, depending on who you speak to, is the team, right? And that's something that I personally still struggle with. On what is a good founder and what is a good founding set and a team. While you have theoretical frameworks, it always, in the most unique cases and the most successful cases, it always boils down to instinct. It always boils down to that one X factor, which only comes with a factor of experience, by practicing the craft over and over again, by studying journeys as closely as you can, and by seeing companies go from 0 to 10 and then go bust maybe as well, right? So I think markets, teams, technology, right? So when I say technology, I don't mean technology for the sake of technology, but technology to solve the problem statement. Because now what is clear is that for each problem statement, you can approach it in 4 or 5 different ways by using multiple technological approaches. But what finds product market fit thereon is something which is a factor of trial and error, a factor of exploration going forward, right? And fourth, I think, is obviously the economic value being created versus the economic value being captured. And I think that is increasingly in our world, that is becoming a big difference. In a world where you see resources being concentrated, in a world where you see open source and public infrastructure becoming, on one hand, more and more ubiquitous, the definition of value capture versus value creation is changing rapidly as we speak. So while, for example, while UPI has created a lot of value for everyone, there are very few people who have been able to capture value via UPI because of the monetization model that's involved there, right? While ONDC again has the potential to create a lot of value by streamlining e-commerce, it might actually end up compressing the value being captured across the ecosystem. Similarly, in case of artificial intelligence, for example, while NVIDIA is creating a lot of value by by all the work that they are doing at the data center level, at the chip level, what that is also doing, it is also concentrating most of the value at an NVIDIA level and not leaving enough for everyone else across the table, right? So I think this equation of value capture versus value creation is something that I'm thinking about very deeply these days, and let's see where we end up with that across different markets.
I think that's actually very, very well put, and I'm sure that you're going to find some success into that, because I think your overarching frameworks of how you're looking at aspects, and you give a very good example of making a sabji, right? Sometimes maybe two chefs are following the exact same recipe, but one person puts one quantity of something else, maybe somebody puts a teaspoon of salt, maybe somebody puts a pinch of salt. It could essentially change the entire dynamic of what that taste is like, right? So I think that's really interesting take, and I think it's probably definitely going to work out for you sometime or the other in the near future.
I hope with explain, bro.
Yeah, definitely. It will for sure. And of course, you are a big IT and a tech space believer as well. So I don't think there's any limit. I mean, if usually the word that we use is sky is the limit, but with IT and digital services, I don't even believe the sky is the limit. I think there is no limit to what we can achieve. No, thank you for that. Thank you for that answer. And I actually, this is a question that follow-up question that I had to this. Considering that AlphaWave has invested in a variety of different companies, right? It's invested in foreign companies such as Uber, SpaceX, Alibaba, Indian companies such as Dream11, Policy Bazaar, Cars24, right? Obviously, behind the scenes, you and I have had some personal interactions where you've told me a little bit about, what it's like exactly with these different companies. And it's a stellar portfolio of companies. Like, I'm so proud to be part of the AlphaWave portfolio, just because I get to share this prestigious, the name of EMB along with these prestigious other companies. But it's a question that I have that I've always kind of been interested in. And I think a lot of people within the company have asked us as well. But having participated in board meetings of early stage startups that have raised funding and have small teams, as well as established companies, such as Dream11 and Cars24, what are some of the key differences that you've observed between these two types of meetings, in especially your board meetings, your quarterly meetings, or let's say an MIS review, etc. But what are some of the key differences that you observe between these two types of meetings in terms of be it metrics, problem statement, other factors? Would love to hear your take on them.
Yeah, look, I think it's a factor of the maturity of the companies which determines where you want to spend. Look, okay. At the heart of it, every decision that everyone takes in life, either as a founder or as an individual, is a question of resource allocation. Right? At the end of the day, resource allocation is what all of this boils down to. When I am talking to you, I am allocating a resource, which is my time, and spending that time with you, and hopefully we'll use that to the best of our abilities. And as a founder, when you have a budget of, let's say, $100 and you have to spend it somewhere, right? That's also a resource allocation question that you are trying to answer, right? So resource allocation is what it always boils down to. One is time, one is money, right? Now, as the company sort of mature from early stage to growth stages, what changes is that the stakes of these things that we're discussing in a board meeting continue to change. Because initially at an early stage, the most important resource that we're talking about is spending time, because we are worried about velocity, right? We have about $4 million, call it, like, let's say, or $5 million as a Series A round, and we have 2 years to figure out whether this company is going to work out or not. So you will start by solving that, what would product market fit mean for this company, right? What are the ways to get to that product market fit? And then you try to solve it tactically also, maybe in some cases where people have certain capabilities. Like, you look, from my experience, I cannot for example, tell you on how to solve recruiting for an IT services company. Right. But if you have a board member who has run an IT services company in the past, he can spend his lots more of his time with you discussing that and adding a lot more tangible value on that part. Right. Whereas where I can add value is probably thinking about, oh, you know, this technology is coming. What could you do with that? Right. So it's about, but at an early stage, the resource that is most important is your time. If this $5 million, doesn't work out, then it doesn't work out. So be it, right? It's a bet for you. It's a bet for us. It's a bet for your employees, and we'll see. Hopefully, it will work out or not, right?
Yeah.
But the idea is that you have to get to that product market fit stage. So from there, you can figure out that what is the 1 to 10 journey going to look like. As the company sort of figures that journey from 1 to 10, and reaches say number 7 or number 8 in that journey, then we are talking about serious dollars at play. Now we are talking about hundreds of millions of dollars at play. We are talking about 1,000+ employees at play. It's not just a scrappy team of 30 people anymore. It's a team of 1,000 people now. It's a company which has ESOPs worth hundreds of crores now, where employee wealth is tied in. It is a company where lots of early stage funds have some stake, like a meaningful stake now of their portfolio involved here now. So the stake shifts, or the resource optimization shifts from time to money. And now the capital allocation decision are the ones which are the most important, and that's what you think about now. Right? Next 1 year, how should my costs grow? How should I display operating leverage in the business? What are the targets that I'm targeting, right? Or next 1 year, what are the new initiatives that I should be spending times on? And what is the budget I should be allocating to those new decisions, new initiatives? Which is the next leg of my growth? Where is the next leg of my growth going to come on? Should I think about innovating in new markets? Should I enter new adjacent category of products? Right? Like all of those become discussion points for a larger company when you're trying to figure out what next. At an early stage company, you're trying to figure out what now. Right? And I think I found that to be an interesting framework, and I wasn't able to delineate this framework when I was looking, if I try to compare it with an early stage company versus a growth stage company. I was only able to understand this shift when I saw a company move from seed to Series D, Series E onwards, and I was able to transfer that journey with that company. And I could see that how the conversation is shifting every month, every quarter, from experiments, from hackiness, from tactical stuff to more strategic, more dollar-denominated decisions, which I found was quite interesting. At the same time, what happens is along the journey, more and more board members come into picture, more and more funds come into picture. There are more voices to take into account for, and I think that's where that's where successful founders are able to manage their board and dynamics very well. Either one-on-one or as a group. They give very clear. They have very clear objectives of what they want to achieve out of that board discussion, and they allocate enough time for each of those discussion points, and hopefully try and drive those to a conclusion. If not, then at least have a jumping off point for the next set of discussions or next set of work to go on from there.
Got it.
But yeah, I would say that's broadly, I would say, the split I have found between early stage versus the growth stage, and how the journey sort of changes over a period of time.
That's a very good take on it, because essentially the underlying principle is always going to be focused no matter what, whichever stage of the company you are in. But at every phase of the company, it like you said, I think your framework is that you kind of try to apply it with a certain resource factor, be it time, be it money, be it a dollar denomination, etc. You have to consider other factors as well. That's quite an interesting take on it. And and I think that also shows the importance of what is the value of having different types of investors on your cap table.
Yeah. Absolutely.
Right? I think that's something that's maybe a lot of people don't necessarily pay attention to at early stages. But I think it's probably a very good advice for young early startup founders, that when you are getting VC, when you are attracting VC money, you should be very cognizant of why you are picking up why you want to pick up a certain check size from a certain investor. What value are they actually adding to you for today and for tomorrow perhaps as well? So I think that's a very interesting take. And
I think that's an interesting point, Rohan, that you make here, because it also speaks to the ability of both investors as well as the founders to 100%. Scale up along with the company.
100%.
Right. I think as an early stage investor, if I start focusing companies on cash flow profile and stuff like that, which is all important in their own rights, but maybe not as important for a seed company as they are for a Series D company, right? Whereas for a Series D company, if I'm only focusing on product velocity, this and that, shipping, yada yada, then we are missing out on the most important parts, right?
It's not always a black and white decision, right? I mean,
Yeah.
cash flow is a super important business. We start businesses to make money, but I think having that focus, you also have to underline it with other factors that, hey, listen,
Yeah.
actually have the
It's a journey, right?
journey.
You traverse through that journey.
Understood. And this actually I have a small question over here. It's this is more of a candid or a more fun question. Since you have such a good framework for how you assess companies, what kind of stages they're in. If you had the freedom to choose any time zone, any year, any region, and you were not part of Alpha Wave or any venture capital structure, which organization would you like to be the founder of, and why? Or or what kind of startup industry would you focus on?
So it's an interesting one. I mean, there can be, I mean,
Just a light-hearted.
no, I mean, I want to give a profound answer to a question, but I think like there is nothing beating Disney or Apple, I feel. I think,
Media and technology, is that how we can look at it?
sorry?
Media and technology, is that
Yeah, I'm deeply enthralled by the world of media,
Yeah.
and how technology has sort of upended it over a period of time, and also enabled it, I guess, in some sense. But I think these are two businesses which have a very deep cultural, technological footprint on our lives, everything that we see around us.
Yeah.
Disney has pioneered basically every innovation which has happened in the world of media and entertainment, from from comic strips to cartoon movies to amusement parks, to superhero movies with Pixar studio. So they have done everything. They have taken every technological wave and held it by its scruff, and executed using that. And whereas Apple has basically just upended the markets, the world as we knew it, with and many times over, not just once, but many times over. First with the personal computing stuff, then with the iPhone, hopefully now with the Oculus. Oh, sorry, the Apple Vision Pro.
Yeah.
So yeah, these are generational companies which have stood the test of time, which have which have seen technological waves, and not just seen but aced multiple technological waves. So I think these are two companies to be very, very proud of.
That's pretty cool. Actually, that's a new thing that I learned today as well. I never knew that you had such an interest in media, but you're right when you put it into the way that you have. I think it's something that a lot of I've actually not heard this from a lot of people, especially when they talk about media. But it's interesting to hear your take on it. And moving on to the technology side, of course, I think that's a pretty fairly common answer, right? Considering the upsurge in AI, considering that a lot of VCs that we speak to nowadays, the first question that they ask is usually that how are you kind of talking about AI specifically, how are you kind of looking at growing it, right? So given the recent surge in in VC interest in AI specifically, right? What areas specifically within AI do you find the most promising for investments, and what factors do you think are driving these trends?
Yeah, I think it's a bit of a disservice to say what areas of AI do you find interesting, because the way at least it's emerging now, it's clear that it will upend every part of your life, right? It is going to upend every part of your life. It is going to permeate whether you know it or you don't know it. So it's like saying, oh, what type of air do you find the best? Like it's air, right?
Yeah.
So I don't think AI has specifically any particular area which I'm more or less excited about. But what I'm hoping to see come out, which could be very interesting in the future, is the culmination or the logical conclusion of mixing artificial intelligence, biotech, and healthcare together in a singular platform. What that will end up doing is it will make research cheaper, faster, quicker. It will make validation cheaper, faster, and quicker. We have the enabling tools around us now, for a bunch of years now, and the rate limiting factor has been our ability to find interesting molecules and innovate. Now I think AI, because it can parse through a lot more of that data, should reduce the cost of R&D. If it reduces the cost of R&D, then it should reduce the cost of medicines and the cost of insurance, right, and the cost of treatments globally. And with that, you will see accessibility become better and better, right? Like recently, they have made some advancements aided by AI. I would say like entirely automated in that sense. where they've been able to isolate the genes which lead to genetic blindness. So if you're able to cure the genetic blindness gene, you have solved like, a
That's
major problem for
a
humanity, like a
huge
billion
world
blind
problem.
people across the world. You have solved
Yeah,
that, right?
yeah.
So I mean, and what is it about? It's about going through the genetic code of many, many people and identifying that one common factor which leads to blindness amongst all of these people, right?
Mm.
Now, these are things which as human researchers would take us ages and ages to do. But probably with AI, you can do it in a much quicker manner. Uh,
100%.
but look, things like CRISPR-Cas9 have existed for a few years now. Their commercialization, the costs have come down. All of that has happened,
Mm.
right? So it's not like people don't know how to edit genes anymore. People know how to edit genes and how to, do it well.
Yeah.
Uh, the question mark is how much throughput can you drive through the system now to identify the right set of gene and then edit it. So if the editing part is solved, then the throughput part maybe AI can help you figure out. So I think that's
Yeah,
yeah,
I think
that's
that's
one part I'm very excited by. And when I say, I would say broadly across species as well, right? So it will have profound implications for agriculture. It will have profound implications for human life, for
Mhm.
plant life, for animal life, everything rolled up into one. So I would say AI x biotech, I think, is something I'm very excited by. Um, Second space which I'm very excited by is I wouldn't again strictly call it AI because again I feel AI is an enabler to all of this trend.
Yeah.
But I think we are now sleeping on the verge of big innovations over the next 2 3 years in VR and AR coming in meaningfully.
Mm.
Not just across gaming, but across a bunch of other use cases.
Mm. Mm.
I don't know if you have tried the new Meta Quest or the Apple Vision Pro, but the experience is fantastic, man. It's
Mm.
like, watching football on the Apple Vision Pro is just like a stellar experience. So I think media and entertainment, of course, because this is the first wave, this is the first industry which adopts any new wave of technology. But I think beyond that as well, it's going to be interesting to see what comes out. So people are already using that for a lot of learning and development use cases. People are already using that for a lot of surgical use cases as well. So I think in Bangladesh recently they did the first total knee replacement using a robotic arm using Apple Vision Pro.
Wow.
So the surgeon was using an Apple Vision Pro and he was moving things around. And then the robot was actually moving the robotic arms and they replaced the total knee
Wow, man.
replacement. I was surprised to know too, by the way, that about 20% of India's knee replacements now happen robotically, total knee replacements. So these things we just don't understand or don't get to interact with a lot, but it's already happening.
Mm.
So I'm excited. So I think these are the two areas where I'm excited to see what comes off.
Mm.
I would say broadly speaking, VR and the use cases that AI can enable within that, and second is the world of biotech.
True, I think although I've never had the pleasure of using the Apple Vision,
It's really a pleasure, one. It's really a pleasure.
I have to use that. And none, unfortunately, it's out of my budget right now. But none of my friends have it either, so I haven't
Come
used.
over, come over.
I've used the Oculus, and I was blown away. I was genuinely blown away. I was playing different games. I think watching some different stuff on it. It was really incredible, the entire experience. And I think what you're saying is absolutely correct. It's the combination of like you said, AI is an enabler, but it's the combination of different emerging technologies with different industries and I think what it eventually saves you on is the decision making time. Because if you think about it, gene splitting is something that we've been doing since the since the mid 1900s as well, right? Where I think when I'm forgetting the actual term of it, but when we did that, I think it was the green trend or something, where the vegetables were, when there was a supply shortage in India.
Green revolution.
The Green Revolution, correct. When there was a supply shortage in India, you kind of they edited the genes out and they were able to kind of
Yeah, hybrid seeds. Yeah.
increase in ridiculous amounts, right? And I think that's just something that's going to continuously grow. No, interesting. And I think one of my last questions around this would be that with India's rapidly growing tech ecosystem and the entire entrepreneurial spirit of it, do you foresee the emergence of a new $100 billion company or a tech giant? Companies such as a Google, an OpenAI, a Meta, etc. Do you see these kind of large technology companies coming out from India? Because right now it's primarily based outside of India, but we have not had a large, tech giant. And I don't mean the likes of TCSs, etc., but I'm talking about an innovator in technology. Do you see that emerging out of India in the next 10 to 12 years?
Yeah, absolutely, dude. It's a matter of time. It's a look. I'm a firm believer in incentives driving actions. Let's look at the setup of the incentive structure where we are today, right?
Yeah.
Some of the smartest people in India are not leaving India anymore or coming back to India, right? They luckily now have an ecosystem where innovation and risk taking is acknowledged and supported and encouraged to a certain degree. We are also coming off an age now where people are starting to see liquidity come from risk taking events like joining early stage companies, starting up small companies, and selling them off initially, right? And we also have a global ecosystem which is looking at us intently, saying what is next from India. If anything breaks out, we are going to support it and back it, right? So I think all these three things create a very good setup for young, smart, high energy founders to to get access to the right set of resources in terms of both capital as well as employees and team, etc., to build generational outcomes in companies, right? The only piece I think we're missing is our innovativeness when it comes to fundamental research and R&D.
Yeah, agreed.
Because if you would look at all of these names that you mentioned, they stem out of some degree of IP, some part of R&D, either government led or led by the founders, which spins out then to create great outcomes. Right? Google was started as a PhD project. At the end of the day, a lot of the early innovation that you saw in the 70s and the 80s came out of the DARPA ecosystem, or like some derivatives of that, some derivatives of the Bell Labs ecosystem, etc. So I think that's one big piece which you're missing in India. And which is why the companies that you see in India that have come out, at least so far in nature, are all companies which are innovators in either execution or in business models, but not on fundamental technologies, right? That needs to change for us to create that $100-200 billion company. Will we create a huge flurry of 10, 5 to 20 billion dollar outcomes? Absolutely, no doubt about that. Right? We'll create a flurry of those outcomes over the next 10, 15, 20 years. But to answer your specific question, that is there that 200, $500 billion company waiting to come out of India? I think that requires a very different approach, which we have not, unfortunately, taken yet. Right?
I totally agree with you. In fact, a lot of discussions that we have within EMB, right? We at this stage of the company that we're in, we try to focus, or we want to put a lot of focus on different R&D situations, right? Because I think everybody, we think, like you said, we think, how can we innovate operationally? How can we innovate through execution, right? But not enough time and effort kind of goes into the R&D part of it, where maybe the Western side of the world is perhaps a little bit more advanced than us.
China, dude, China is like crazy.
100% China.
Their investments in hard tech are like inspiration over the last 5-7 years. They have done a great job.
Fantastic job. And I've been to a couple of I've not been to it, but I have a lot of friends, a lot of colleagues who have gone to China for these different types of fairs, exhibitions, and they come back a different person. They're like, what am I doing over here? Like this thing, whatever I'm looking at on my daily life, these guys are solving it via methodology that I would never have even imagined in my life.
Yeah.
So, totally agree with you. And
I think it's a factor of like resource allocation, it's a factor of regulation, it's a factor of culture. But I think in no way should you take it as like, I'm not optimistic, right? Like I said, I think there's going to be a flurry of $5 to $20 billion companies out of India, because the markets are just so large globally, and even in India, that you can, just by innovating on business models, just by giving a better product, just by having a better delivery model, you will create those outcomes irrespective. The question though is that, can you create a $200 billion company, which I think requires a different muscle.
No, interesting. I think that's a very good take on it. And, that brings us towards the end of our main segment of the questions. Thank you so much. That's, I think, a very, very good insight of what you've given us and how you feel the future of technology, especially in India, is going to be like. We enter the segment of what we call this or that. It's essentially our own take on rapid fire. So I'm going to ask you a couple of questions. Just give me quick answers and we move on. It's just about a few questions over there. So the first question: service-based companies or product-based startups?
Product-based startups, which can eventually add services to build moats.
Okay, fine. Early exit or long-term investments?
Long term.
Tech innovation or market demand driven?
Market demand driven innovation.
All right. Hands-on management or delegative leadership?
Delegated, I guess.
Okay. Focusing on core competencies or diversification into new areas?
Core competency.
Okay. And the last question, which a lot of people ask who are working in startups and working in companies, ESOPs or higher base salaries?
ESOPs, always ESOPs.
100%.
Always ESOPs, bro.
I had a feeling of that answer. No, that was thank you for those quick answers. The last question that I want to ask you in on this podcast is, of course, for the people who are watching. A lot of people are young people working in companies, aspiring to maybe start some of their own companies in the near future as well. So, considering everything you have said, your entire experience, what advice would you give to aspiring entrepreneurs who want to grow a company seeking VC funding? What advice would you give to them?
I think a very important element of seeking VC funding is, I would say, two parts to it. First is your ability to paint a picture, your storytelling ability, especially at an early stage, because there's limited things to go by, right? And your storytelling ability encapsulates so much more than what you think. It's not just how you articulate a market. Like, the way you articulate a market tells us how deeply you have thought about a market. The way you talk about how large could this be has so many incorporated elements to it that it tells us about what kind of an organization you want to be and what kind of a leader you are going to be. Right. The way you think about competition, tells us how deeply researched your problem statement is today and how deeply mooted you could be in the future. Right. So I think storytelling is used or thrown around as a word which is like kind of swing negatively or as a frivolous thing that MBA students do. But it's not really that. You will only be able to tell a good story once it is well articulated, laid out, structured, and researched in your own mind first. So having that journey, I think, is very important. And because oftentimes when you're narrating a story to yourself, you know where it's going to fail or what are the legs where someone has to take a leap of faith. So you know how to answer those things better then. So I think storytelling is one critical element to it. And second is, I would say, perseverance. To this entire process. I bring the perseverance in two ways, right? First is the perseverance of the fundraising process itself. You only need one yes, which might be littered with multiple no's on its way,
100%.
which is fine, which is always happens. But what is more important is that you keep at it and keep going back at it, with obviously incorporating the feedback. Because many times a fund that would have passed, let's say, a year ago would come back in and participate again when they see velocity. So I think perseverance, I think that's on one leg, and second leg of perseverance is obviously it's going to be a 10-year journey, right? Or a 20-year journey, which is going to, you'll have days when you will want to wake up in the night and throw up twice and then sleep and then sweat all over again. So just making sure that you're mentally ready for a challenge like that, I think that is a critical aspect of it. So don't look down on storytelling and always persevere.
I think I couldn't agree more. What maybe I initially took as lightly as the storytelling part, I've learned a lot from working with Nishant as well, and I 100% agree with your second point in terms of perseverance. A long time back, before starting EMB, there was a gentleman who has started his own business, and he told me, he's like, "Beta, देखो, passion होता है एक और discipline होता है. Passion मर जाता है सालों के बाद, लेकिन discipline आपका नहीं मरता." So get the discipline part correct. I think that solves majority of your problems. But thank you so much for your takes. I'm definitely going to go back and read and watch this entire video again, because there was some really interesting things that you said. And thank you so much for being candid and being very transparent. I think that's something that a lot of people would like to hear, and I personally enjoy. That's why I enjoy speaking to you so much. You say it as it is, and that's something that I really do appreciate. So Tushar, thank you for coming on to EMBytes.
I think I'll just top it up by saying that candidness or not, the views will tell us how this episode is being perceived. The number of views.
That's going to be hopefully in a very short in a very short span of time. But
Yeah.
I think anybody watching will definitely walk away with some insights and some learning. I know I
Yeah.
have.
Yeah.
So I'm sure I'm speaking on behalf of anybody watching this as well. But thank you,
Awesome.
Tushar. Thank you for coming to EMBytes, and we really do appreciate you coming, and wishing you all the best. And
Thanks,
look
Ron.
forward to you soon.
Yeah. See you soon.
Thanks. Take care. Bye.
Bye, bro.